10 years ago, my IRA had a balance of roughly $25,000. Over the following decade, I contributed just over $21,000 in total, mostly because I live abroad and I cannot always contribute regularly. But despite that, now in early 2026, this account has grown to just over $100,000. What is important is that this growth didn't come from trading, trying to time the market, or doing anything clever. It came from staying invested and letting compounding do its work over time. And in this video, I want to walk through the numbers and show you why time mattered more than how much I added. Now, usually I talk about my taxable brokerage account on this channel, but today I'm focusing specifically on my IRA. If you're new here, hi and welcome to my Investing for Retirement channel. I am 41 years old and trying to save for retirement. So let's take a look at the numbers. The beginning balance of my IRA back in January 2016 was, as I said, a little bit over $25,000. The deposits that I have made since then amount to $21,200, and the ending balance as of today, January 2026, is a little bit over $100,000. And in this time period, the total growth of the account is a little bit over $53,000. Now, what I want you to keep in mind is that more than half of the final IRA value came from growth and not from contributions. How is this possible? Well, there are two things. The first thing being compound interest. As you know, compound interest is the interest you earn on interest. So let's say, for example, you have an initial deposit of $100 and you invest it at an interest rate of 5% per year. After 1 year, you're going to have $105. After 2 years, you're going to have $110.25. And after 10 years, you're going to have $162.89. And maybe at the first glance does not seem like a big difference, but as you can imagine, little by little, it adds up, especially if you have higher contributions. Now, I want to show you quickly how my account looked over this 10-year period. Here you can see the graph of the growth, and you can see that the majority of the growth really happened over the last 2 years. And all in all, the rate of return over these 10 years is about 10.1%. Now, the second way that this money has grown is through automatic reinvesting of dividends. And in the beginning, I was receiving small dividends from each one of my holdings, but I consistently reinvested them back into those holdings. And little by little, this also added up. So I just want to give you an example of my numbers for 2025. So the total investment returns for last year were $15,746.82. Of that, $2,068.54 came from dividends, which were then, of course, reinvested. And the investment gain was $13,678.28. So the most important lesson here is that time mattered more than activity. And if you find yourself in a situation where you cannot do your full IRA contribution, or like me, you cannot contribute regularly for one reason or another, don't despair. As you can see, the money that you already have invested is going to work for you, and it's going to increase over time. Thank you so much for watching this. I hope you're having a great day, and I hope to see you in the next video.